Ever wonder why most traders keep losing while a few seem to ride trends like a boss? There's a secret the pros use that nobody talks about, and it's not what you think. Stick around because we're about to spill it. Yo, if you've been chasing trends and ending up frustrated or broke, you're not alone. Most traders think following a trend is just jumping in when it looks hot, but pros play it way different. In this video, I'm breaking down the exact mindset and moves top traders use to actually profit from trends. By the end, you'll see why the stuff you've been doing might be killing your game, and you'll have a way to trade smarter, not harder. Let's get into it. Alright, so here's the deal. When most traders hear the word trend, they immediately think, oh, just hop on the move, ride it till it peaks, and cash out. Sounds simple, right? But that's where almost everyone trips up. The big myth out there is that following trends is just spotting a chart moving up or down and jumping in before it explodes. Newsflash, that's not how the pros do it. And if you try that, you're basically gambling. Most traders look at a trend and see opportunity, sure. They see a stock, crypto, or whatever hitting a new high and think, yeah, I gotta get in now, I'm missing out. That's the classic FOMO trap. They think trends are like waves you just ride. But in reality, trends are more like stealth waves. They move in ways that aren't obvious at first. If you're only looking at the obvious late-moving stuff, you're already behind before you even place your first trade. Here's why it usually fails. When you chase a trend because it looks hot, you're often jumping in after most of the move is already gone. That's what kills beginners' accounts so fast. You see, trends don't just go straight up or down. There are pullbacks, consolidations, fake-outs, little dips that feel like trend reversals but aren't. The average trader freaks out at the first tiny wobble and either cuts their losses too early or doubles down at the wrong moment. Either way, the results are brutal. And this isn't just beginner stuff. Even intermediates can fall into the trap if they're not thinking like a pro. People often confuse short-term noise with real trend signals. They see a green candle or a small breakout and think this is it, the big move. But the pros are looking at bigger context. They're watching higher time frames, multiple indicators, and market structure to make sure a trend is legit before committing. It's not glamorous and it's not instant gratification, but it works. Another huge myth is that trends are predictable. Let me be real with you. Trends are messy. They have ups, downs, sideways moves, and moments where they completely stall. Most people assume that if a trend has been strong, it's guaranteed to keep going, so they risk more than they should. That's how people get wiped out chasing strong trends. They ignore the fact that the market isn't linear, it's chaotic, and no trend lasts forever. Professionals don't assume, they analyze. They respect the market's structure and accept that trends can reverse, sometimes without warning. And don't even get me started on the trend lines and moving averages will save me crowd. Sure, those tools help, but relying on them blindly is like thinking a map will get you out of a maze if you can't read it properly. Beginners, and even some seasoned traders, think drawing a line on a chart will tell them everything. Pros know it's just part of the puzzle. They combine trend analysis with volume, market sentiment, and timing to actually understand the move. That's why the average trader loses, while pros consistently find opportunities. Now, I'm not saying you can't make money chasing trends. It's just that doing it the way most people do is like playing Russian roulette with your account. The market punishes sloppy timing, emotional decisions, and assumptions. The myth that trend following is just about jumping on a moving chart is exactly what keeps traders in the losing 90%. The key difference is mindset and process. Professionals don't see a trend and rush in. They see the trend, confirm it with multiple layers of data, manage their risk, and only then do they make a move that has a much higher chance of winning. So yeah, if you've been struggling, frustrated, or feeling like trend following just isn't for you, don't sweat it. The problem isn't the market, it's the way most people are approaching it. Understanding this myth and breaking it is step one. Once you get that, you start seeing trends like a pro, not like someone blindly hoping for a big payday. All right, so up next, we're going to shift gears a bit. I'm going to show you exactly how professionals see trends differently, the mindset, the tricks, and the little-known moves that separate the casual traders from the people who consistently crush it. Stick with me, because this is where the game changes. So now that we've busted the myth about trend following, let's get into the juicy part, the way professionals actually see trends. And trust me, it's not just about watching a chart go up or down. There's a mindset, a way of thinking that completely flips how you approach the market. While most traders are busy chasing the obvious moves, pros are playing a different game entirely. Here's the thing. Professionals don't just jump on a trend because it's moving. They're constantly asking themselves, is this real? Is this sustainable? They treat the market like a puzzle, not a roller coaster. Every move has a story, and they're piecing it together before they make a decision. That's the secret mindset that separates the casual traders from the ones who consistently bank money. One big difference is patience. Most traders are impatient. They see a move starting and feel like they got to get in or they're missing out. Pros? They wait for confirmation. They're okay with sitting on the sidelines, even if it means missing a few small wins, because they know the big move is coming and they want to hit it clean. It's all about timing and context. You can't just hop in blindly and hope the trend carries you. Another huge shift is how they look at risk. Beginners see a trend and think only about the potential reward. Oh man, it's moving fast. I could double my account. Pros are always thinking about risk first. They know one bad trade can wipe out days or weeks of profits. So even if a trend looks amazing, they size their positions right, set stops carefully, and never let emotion dictate their moves. That's why they can consistently ride trends while most people get burned. Professionals also think in layers. While casual traders focus on the short-term candles, the pros are scanning multiple time frames at once. They look at the bigger picture, the overall market structure, and how different trends align across charts. This multi-layered view lets them spot real opportunities and avoid the fake-outs that most traders trap. It's like seeing the forest and the trees at the same time, instead of just staring at one leaf and thinking it tells the whole story. And here's something people really underestimate. Pros are always anticipating, not reacting. Most traders react to price movements. They jump in when something happens, thinking it's the start of a trend. Professionals, on the other hand, are predicting potential moves. They're thinking about where the market is likely to go next based on patterns, context, and behavior they've seen over and over. This proactive approach gives them an edge that most traders never even consider. Another key piece of the puzzle is emotional control. Trends are messy. Even the strongest trends pull back, stall, or hit resistance. A lot of traders freak out at the first sign of trouble and either bail too early or double down recklessly to try and catch up. Pros know these wobbles are part of the game. They stay calm, stick to their plan, and let the trend play out. That emotional discipline is huge. It's what keeps them in trades that turn into big wins instead of forcing them out early like everyone else. Now, let's talk about one of the biggest secrets that pros use. It's not some fancy indicator or secret software. It's reading the market context and letting it guide their entries and exits. They don't force trades. They let the market tell them the story. It's almost like listening instead of talking. While most traders are screaming to get in, the pros are quietly observing, analyzing, and only pulling the trigger when everything lines up perfectly. That's why they look like they're always one step ahead, even when the market seems chaotic. And it's not just for the experts. Even beginners can start adopting this mindset by focusing on patience, context, and emotional control. Instead of chasing every trend, start observing. Take notes, and wait for setups that make sense across multiple layers. Over time, this way of thinking becomes second nature, and you'll notice your trading starts looking more professional without adding complicated tools or hacks. So yeah, seeing trends like a pro isn't about finding some magical indicator or being lucky. It's a combination of patience, context, risk awareness, emotional discipline, and anticipation. Once you start thinking this way, your whole approach to trend following changes. You start seeing opportunities instead of panic signals, and your trades start aligning with the moves that actually matter. All right, now that you get the pro mindset, the next thing we need to tackle is the mistakes most traders make, even when they think they're doing everything right. Because here's the catch. Even with this mindset, if you fall into the classic traps we're about to talk about, you'll still get burned. So stick with me, because next we're diving into exactly what trips people up and how to avoid it. So now that we know how pros actually see trends differently, it's time to get real about why most traders, even some who think they're doing everything right, still get wrecked. And let me tell you, these mistakes sneak up on you whether you're a beginner, intermediate, or even a seasoned trader. The first trap everyone falls into is chasing the trend too late. You've seen it a million times, right? A stock, crypto, or whatever is blasting off and people freak out and jump in thinking, I can still make some quick cash. But here's the kicker. That move you just jumped on, chances are it's already 70% done. Most traders aren't thinking about momentum, they're thinking about greed. The pros, they wait for setups that give them an edge. They know patience is worth more than FOMO. Sitting on the sidelines might feel boring, but it keeps your account intact and positions you for the real moves. Then there's the classic pullback panic. Trends don't go straight up or straight down, they zigzag. Beginners see a little dip or sideways action and freak out, thinking the trend is over. They sell too early, or worse, double down recklessly to try and catch up. Pros laugh at this, metaphorically speaking. They know pullbacks are natural. They're like the market taking a breath. Instead of panicking, they look at these dips as potential entries at better prices. Understanding that pullbacks aren't enemies but opportunities is a huge shift in mindset that most traders never make. Another massive mistake is overconfidence during strong trends. This one sneaks up even on traders who are doing well. Imagine you've been riding a trend, making money, and suddenly you feel untouchable. That's a red flag. Overconfidence leads to ignoring risk, stretching your positions too far, or thinking the trend will never end. And guess what? That's exactly when the market reminds you who's boss. Pros stay humble. They know even the strongest trend can hit a wall or reverse in a heartbeat. Staying aware, respecting stops, and managing risk is what keeps them alive in the long game. Then there's ignoring market context and higher time frames. A lot of traders zoom in on the 1-minute or 5-minute chart, see a breakout, and think, yep, trend's on, but they ignore the bigger picture. They don't check the 4-hour or daily charts to see if the trend aligns, or if it's just a tiny move in the opposite direction of the bigger market flow. Professionals always keep the broader context in mind. They know a trade might look perfect on one time frame, but is actually a trap if you zoom out. Thinking in layers is a subtle but huge edge. And of course, we can't skip the mistake of risking too much because the trend feels strong. This is where emotions and psychology really mess people up. Just because a trend is screaming in one direction doesn't mean you throw caution out the window. Most traders risk too much money trying to ride what looks like a guaranteed win. Pros, they size their trades correctly. They calculate risk versus reward, and they stay disciplined. They're not trying to get rich off a single move. They're trying to survive and thrive over hundreds of trades. Here's the real kicker. All these mistakes compound. Chasing a late trend while panicking at pullbacks and overconfidently risking too much, that's the perfect storm to blow your account. And it's not some secret. This is exactly why the stats are stacked against casual traders. Most people never even realize they're repeating the same mistakes over and over because they're too caught up in the hype of the trend itself. Now, the thing that separates pros is not just avoiding mistakes, it's having a system and sticking to it, even when emotions are screaming otherwise. They know the traps exist, and they build their trading around them. They accept that some trades will be losers, that pullbacks will happen, and that trends can reverse. But they also know exactly how to respond when these things occur. Instead of reacting emotionally, they stick to their plan, follow their rules, and use mistakes as feedback to improve. That's how consistency is built. Another subtle mistake most traders make is ignoring the psychology of the trend itself. Trends aren't just lines on a chart, they're the reflection of human behavior. Fear, greed, panic, euphoria, all of it shapes the movement. Beginners often trade without thinking about why a trend is moving the way it is. Professionals read the sentiment behind the trend, watching how other traders are likely to react. This gives them an almost unfair advantage because they're anticipating moves before the crowd even notices them. And that brings us full circle to why these mistakes are so damaging. If you don't see the trend like a pro, if you're constantly reacting instead of analyzing, you're always a step behind. Every dollar lost, every trade cut short is just a symptom of approaching trends the wrong way. Fixing it isn't magic. It's about seeing the patterns, respecting risk, and thinking ahead like the pros do. All right, so now that we've broken down the traps that destroy most traders, it's time to flip the script. Next, we're diving into the exact step-by-step approach professionals use to ride trends the right way. We're going beyond mindset and mistakes. We're getting into actionable moves, routines, and strategies that you can start using today to trade smarter and avoid these pitfalls. Stick with me, because this is where things get really practical and game-changing. All right, so now that we've talked about how pros see trends differently and the mistakes most traders make, let's get into the part you've been waiting for, the actual step-by-step approach that professionals use to ride trends the right way. This is where the rubber meets the road. And trust me, it's not about some flashy indicator or insider tip. It's about a system, a mindset, and routines that make trading way less stressful and way more profitable. The first step pros take is observation. They spend a lot of time just watching the market before they even think about placing a trade. Sounds boring, right? But this is huge. They're not just looking at a chart, they're reading the story behind it. They're asking questions like, why is this moving now? Who's buying? Who's selling? Is this part of a bigger trend or just a random spike? By observing first, they get a sense of the market's rhythm. They're in tune with the flow instead of chasing it blindly like most people do. Next comes confirmation. Professionals never jump in based on a hunch. They wait for signals that line up with the bigger picture. This could be a trend aligning across multiple time frames, a pullback hitting a support level, or volume confirming the move. Beginners often see a small breakout and think it's go time, but pros know that confirmation reduces risk and increases the chance of a winning trade. They're not gambling, they're stacking the odds in their favor. Once they have confirmation, they focus on entry points. And here's where the magic happens. Pros don't just get in at any price. They look for optimal entries where risk is minimal and reward is high. That might mean waiting through some sideways movement or small pullbacks. Most traders can't do this. They get impatient and jump in at the wrong moment. But pros know that a clean entry can make the difference between a small loss and a huge gain. Timing matters, and they treat it like a science. After entering a trade, pros immediately think about risk management. This isn't an afterthought, it's built into the trade. They know how much they're willing to lose and set their stop losses accordingly. And it's not just about protecting capital, it's about peace of mind. Knowing that a single mistake won't wreck your account lets you stay calm and stick to the plan. This is something beginners constantly struggle with. They either risk way too much or move stops around emotionally, which almost always ends badly. Then comes monitoring the trend. Trends aren't static. They move, stall, pull back, and sometimes reverse. Professionals constantly reassess their trades as the market evolves. But here's the thing, they do this without panic. They have rules for adjustments, scaling out of positions, and locking in profits. This way, they can ride trends longer and maximize gains instead of jumping out too early or getting shaken out by normal market noise. It's all about staying flexible, but disciplined at the same time. Another part of the pro approach is using higher time frame context to guide decisions. While beginners focus on one chart, pros check bigger time frames to make sure their trades align with the broader market trend. This prevents them from getting trapped in tiny, meaningless moves that feel like trends but aren't. Seeing the bigger picture is a subtle skill that dramatically increases the odds of success. It's like having a GPS instead of wandering around blind. Psychology also plays a huge role. Professionals are emotionally detached from their trades. They don't get greedy when a trade is up, and they don't panic when it dips. They treat losses as part of the process and let winners run according to their plan. Most traders, on the other hand, let emotion drive their decisions. They double down recklessly or bail too early. Pros know that the market will always do its thing, and your job is to ride it smart, not try to control it. And here's a key piece most people overlook. They plan their exits before they even enter. Professionals know exactly where they'll take profits and where they'll cut losses. This isn't guesswork, it's calculated based on trend structure, support resistance levels, and realistic risk-reward ratios. Beginners often leave exits to chance, hoping they can feel it out, which is a fast track to blowing up accounts. Finally, pros review and refine every trade. After a trend ends, they analyze what worked, what didn't, and how the market behaved compared to their expectations. This review process is what separates consistent winners from people who just get lucky once in a while. By learning from every move, they continuously improve, and over time, their system becomes sharper and more reliable. So when you put it all together, the observation, confirmation, smart entries, risk management, monitoring, higher time frame context, emotional control, planned exits, and post-trade review, you get a repeatable process that makes trend following predictable and manageable. It's not about luck, it's about discipline, patience, and thinking like a pro every step of the way. All right, now that you've got the step-by-step blueprint pros use to follow trends, the next thing we need to cover is the psychological edge, how pros control emotions and stick to their plan. Because here's the truth, even the best system fails if you let fear or greed take over. Stick with me, because in the next section, we're diving into the mindset hacks that keep professional traders calm and consistent, no matter how crazy the market gets. So we've talked about how pros spot trends and the step-by-step system they follow to ride them. But here's the kicker. None of that even matters if you can't control your emotions. Seriously, this is where 90% of traders fall flat. You could have the best strategy in the world, but if fear, greed, or FOMO hijacks your brain, your account is toast. Professionals know this, and they've got a way of thinking that keeps them cool even when the market looks like a freaking roller coaster. Let's break it down. Imagine you're watching a trend you're in start pulling back a bit. Most traders see that dip and panic. They're thinking, "Oh crap, am I losing all my money?" And they hit the sell button way too early. That's fear talking. Professionals, on the other hand, see it as part of the process. They know trends don't move straight up or down. Pullbacks are just the market taking a breather. They don't freak out. They stick to their plan and let the trend play out. That mental edge alone keeps them in trades that most people bail on. Greed is another beast. We've all been there, watching a trade climb and thinking, "Man, this could double my account if I just hold a little longer." Beginners often stretch their risk because they're chasing those big wins. But pros don't do that. They stick to pre-planned targets and rules. They take profits in chunks, let the remainder run, and never let greed override logic. Over time, this consistency is what turns small wins into a seriously profitable account. Here's a big secret that pros use. You gotta detach emotionally from each trade. Sounds simple, right? But most traders are emotionally invested in every candle, every tick. Pros treat trades like business transactions, not personal victories or losses. They know the market isn't out to get them, it's just doing its thing. By removing ego from the equation, they avoid overreacting to every little wiggle, which is where the amateurs blow up. Another key part is preparing mentally for losses. Beginners hate losing. It's a punch to the gut every time. Pros, though, know losses are part of the game. They plan for them, accept them, and move on. This doesn't mean they're reckless. It means they manage risk, so losses are small and manageable. Losing doesn't shake them because they understand it's just a single step in a longer journey, not the end of the world. Let's talk about another angle, avoiding FOMO. Fear of missing out is the silent killer of accounts. You see a trend you didn't enter and suddenly feel you need to chase it. Most traders jump in late, get burned, and wonder what went wrong. Pros avoid this trap completely. They know they can't be in every trade, and that patience beats panic every single time. Missing a trade isn't a failure, it's just part of the process. Now, controlling emotions also means having a routine and a set of rules. Pros don't make trades on the fly because they feel like it. They follow a checklist, a plan, and predefined rules for entry, exit, and risk. This routine removes impulsive decisions and keeps them consistent, no matter how volatile the market gets. It's kind of like a pilot following a flight checklist. They're not winging it in the middle of turbulence. Another subtle but huge mental edge is self-awareness. Pros constantly check themselves. Am I too nervous? Too excited? Am I chasing revenge after a loss? Recognizing these triggers before they act on them is huge. Most traders don't even notice when emotion creeps in. They just react, and their account pays the price. Professionals catch these moments, pause, and make decisions based on logic and strategy, not feelings. And here's a big one, focusing on the process, not the outcome. Beginners get obsessed with how much money they make or lose on each trade. Pros focus on following their system, executing properly, and sticking to their rules. The results come naturally over time. This mindset shift alone can save new traders from burning out or making panic-driven mistakes. Finally, pros know the power of taking breaks and stepping back. Trading non-stop or obsessing over every candle is a recipe for emotional burnout. They step away, review, recalibrate, and come back with a clear head. Most traders are glued to screens 24/7 and let stress and emotion rule them. By taking control of their mental state, pros stay sharp, calm, and ready for the next opportunity. So yeah, mastering trends isn't just charts and setups, it's 50% psychology. The pros aren't just lucky or smarter, they've trained their mind to stay calm, disciplined, and patient no matter what the market throws at them. If you start practicing these mental habits, detachment, emotional awareness, routine, patience, and process focus, you'll notice a huge shift in how you trade, even if your strategy is still evolving. All right, now that you understand the psychological edge, the next part is where we translate all this into actionable, beginner-friendly tips. We're talking mini routines and simple steps you can actually start using today to approach trends like a pro without overcomplicating things. Stick with me because this is where theory becomes practice and you start seeing real changes in your trading game. All right, so now that you've got the mindset, the step-by-step approach, and the way pros see trends differently, let's talk about how you can actually apply this stuff today. I'm not talking about some complicated strategy that takes months to figure out. I'm talking about simple, practical steps that make a real difference, whether you're just starting out or already trading but struggling to get consistent. First up, observation. Yeah, I know we've mentioned this before, but it's worth repeating because it's huge. Take the time to watch the market without placing trades. Just observe. Notice how trends start, how pullbacks happen, and where people panic. This is like watching a game before you play it. You're learning the rhythm without risking anything. Beginners often feel like they need to jump in immediately, but stepping back and watching trains you to recognize real setups versus noise. It's boring, but trust me, it pays off big time. Next, start small and stick to your plan. Don't try to go all in on your first perfect trade. Pros start with small positions even when they see a strong trend to test their analysis and their emotional control. This also helps you build confidence without risking your whole account. Beginners tend to overtrade or size positions too big because they're chasing excitement or big wins, but small, consistent trades are how pros scale up over time. Another tip is to focus on risk management. You've heard this a million times, but it's because it's that important. Always define your risk before entering the trade. Know your stop loss, calculate your potential loss, and don't let emotion make you move it. Professionals treat this like sacred law. Your account survives because you respect risk. Beginners who ignore this often get wiped out, even on trades that look perfect. Now let's talk about pullbacks and patience. Don't just jump into a trend because it looks like it's moving fast. Wait for pullbacks or retracements to enter at better prices. This not only reduces your risk, but it also gives you a better chance of riding the trend longer. Most new traders think they need to be first, but being patient and disciplined is what makes you look like a pro. Remember, trends don't go straight up, they breathe, and entering at the right moment is key. Another quick tip is to always check the bigger picture. Don't just focus on the short-term chart. Look at higher time frames to confirm the trend's strength and direction. Even if a small chart looks bullish, the bigger chart might tell a different story. Pros constantly do this, and it's one of the reasons they avoid fake-outs and traps that beginners fall into. Start making this a habit. It's like having a cheat code for spotting real trends. Emotional control is next. You've heard the psychology stuff before, but here's how to make it practical. Set clear rules for entries, exits, and stops, and stick to them no matter what. When fear or greed creeps in, you have your plan to fall back on. Professionals don't react emotionally, they react logically. Beginners often ignore this and let panic or excitement dictate decisions. Start practicing this now, even on demo trades, and you'll notice a massive improvement in how calmly you handle trades. Also, start reviewing every trade, even the small ones. Write down what worked, what didn't, and how the market behaved. This review process is how pros improve over time. Most beginners don't bother, they just move to the next trade and hope for better luck. But taking the time to reflect gives you insight into your mistakes and successes, and that's how you start trading smarter, not just harder. And here's a subtle but powerful tip. Don't try to catch every trend. Missing a move doesn't mean failure. Professionals understand that you can't be in every trade, and chasing everything will burn you out fast. Pick the setups that line up with your rules, manage risk, and let the rest go. Focus beats frantic activity every time. Finally, practice consistency. Stick to a routine, trade according to your plan, and don't chase the hype. Even if you only trade a few times a week, following a disciplined process will teach you more than trading every single move. Consistency compounds over time, and that's how pros build real results. So, if you take these tips, observe before acting, start small, manage risk, wait for proper entries, check higher time frames, control your emotions, review trades, pick quality setups, and stay consistent, you're not just trading, you're building a professional approach that grows over time. You're training yourself to think and act like the pros, not the casual crowd that loses money chasing trends blindly. All right, now that you've got these actionable steps, the next thing we'll cover is how to tie it all together with a solid conclusion and key takeaways, plus a reminder that trading like a pro isn't about luck, it's about following a process. We're also going to wrap it up with some inspiration and a call to action, so you leave this video ready to put what you've learned into play. Stick around for that because it's the perfect way to finish this training and start applying it today. All right, so here's the bottom line. Following trends like a pro isn't about some magic indicator, luck, or trying to catch every single move. It's about thinking differently, controlling your emotions, and sticking to a system that actually works. You've seen how beginners chase trends too late, freak out on pullbacks, or risk way too much. And now you know how professionals approach the same moves with patience, context, and discipline. That's the real secret right there. It's not flashy, but it's consistent, repeatable, and it actually makes money. The final secret? It's all about perspective and patience. Professionals don't see every trend as the one that's going to make me rich. They see it as part of a bigger game. They're playing the long-term strategy, making small, smart decisions and stacking wins over time. They know that missing a trade or taking a small loss isn't failure. It's part of the process. Beginners often get caught in the hype of every breakout, but pros know the real money is in trading smarter, not faster. So, here's the takeaway. Watch, observe, wait for confirmation, manage your risk, and control your emotions. Start small, stick to your rules, and focus on process over outcome. When you combine all of that, you start thinking like a professional, and suddenly trends don't feel so scary. They feel like opportunities waiting to be taken. Now, if you're serious about stepping up your game, start applying even one or two of these ideas today. Don't try to do everything at once. Just pick one habit, stick to it, and build from there. The difference between losing money and trading like a pro isn't luck. It's discipline, mindset, and a repeatable approach. If this video helped you see trends in a new way and gave you some actionable steps to start trading smarter, hit that like button, subscribe for more trading secrets, and drop a comment telling me which tip you're going to start using today. Trust me, once you start thinking like a professional, you'll never look at trends the same way again. And hey, stay tuned because in the next videos, we're diving even deeper into advanced trend strategies and real-world trade examples that show exactly how pros execute moves while most traders panic. Stick around, you don't want to miss it.